Good evening, everyone. Thanks for joining our seminar on the Corporate Transparency Act. My name's Ralph Troiano. We're going to explain tonight everything we can about the new federal law called the Corporate Transparency Act, and most importantly, what it means to you. Let's go ahead and take a look at what we have here. And as a hint, the subtitle says Board Member Registration. This is what it means to you. So let's go ahead and get into the details. First off, as I indicated, I'm Ralph Troiano. I'm one of the founders of C.I.A. Services. We're celebrating our 40th year, so we're real proud of that. Renee Mix is our president and CEO. She also has been part of getting through what's in the Corporate Transparency Act and how best to implement it for our clients. So I wanted to recognize both her and myself who's doing this seminar. Let's start with a background. First off, the Corporate Transparency Act was actually passed at the end of 2020. It finally was passed by Congress on January 1st, I believe it was, of 2021. And it was part of the Defense Authorization Act at that time. The law actually became effective only this year, even though it was passed at the beginning of 2021. And that's because, like most laws, the law is passed and then it's left up to departments to come up with the rules for implementing the law. And so the Treasury Department issued the rules just in the middle of last year, saying that beginning on January 1st, 24, it would become effective. The intent of this already indicated that was part of the Defense Authorization Act, was to help detect and deter illicit activity, such as money laundering, terrorist financing, human and drug trafficking, counterfeiting, piracy, financial fraud, and foreign corruption. Wow, that's a lot. What does that have to do with us? Well, this has to do with transparency of who is running corporations. And so the entities that are subject to this are corporations, LLCs, limited liability corporations, limited liability partnerships, and really any other entity which is registered to do business with the Secretary of State's office. In Texas and in other states, the equivalent office for registering entities and corporations. Now, the Act concentrates on small entities. I'll describe that in a little bit, but it concentrates on them because there's the feeling that those are the ones that can more easily slip under the radar and miss, and the government could miss that illicit activity. And it excludes entities that are already regulated in other ways. Let's start with three definitions that I'll be using throughout. CTA, that is the Corporate Transparency Act, which was passed and the rules were implemented in actually September 22 to become effective this year. And any entities covered by the Act must comply no later than December 31st of this year. We'll talk a lot about the entities here in a moment. Next thing is BOI, beneficial ownership. That's the key definition that's in this act. And beneficial owners are decision makers of the corporation, or anyone who owns more than 25% or more of the business. For associations, these are the board members. It does not include officers who aren't board members. In other words, officers who don't get to vote. They may be an assistant treasurer, assistant secretary, or something like that. It does not include them because they don't get to vote on issues. And it does not include volunteers on committees, again, who are not the decision makers for the corporation. The last definition that we'll be using throughout is FinCEN. That's the Financial Crimes Enforcement Network. It's a part of the Department of Treasury, and it is the federal agency which is designated to receive and maintain the beneficial owner information. So now that we've got those definitions out of the way, immediately after it became official, when the rules were issued, and that finally January 1st came here and everyone realized, oh, wow, this is real, there was some pushback. Many in our industry don't believe that CTA was ever intended to apply to associations. We'll talk about exemptions later, but tax-exempt organizations are not subject to it. Associations can be tax-exempt. Some are, some aren't. We have special rules with the IRS where we can file as a homeowners association versus a regular corporation. So there was a lot of thinking that, well, this isn't going to really apply to associations. And the initial rules didn't specifically say this applies to associations. So there was a thought it didn't apply. When it became obvious that it did, then the trade institute for our industry, called Community Associations Institute, or CAI, they've been lobbying on our behalf, and they made a request to FinCEN for clarification to simply say, did you mean to exempt homeowners associations? And not only did they say, no, we didn't mean to exempt them, but their published explanation of the law on the FinCEN site now has wording that specifically says, and homeowners associations specifically must file. That language wasn't in there initially, but now it is. In June, CAI approved filing a lawsuit on behalf of associations, so a class action on behalf of all associations. There'll be an initial hearing, I understand, in October. Who knows where this might go, but it's unlikely that any federal lawsuit of this type is going to be totally resolved through appeals and everything else by the end of the year. Now, there also have been some lawsuits filed by individual businesses or business groups to contest either the applicability, does it apply to my type of entity? That's what CAI is arguing, or even the constitutionality of the act. Does Congress have the right to pass something like this, and does the Treasury Department have the right to gather this information? I understand that at this point, there's actually been 8 lawsuits filed. This one I'm about to refer to was the first one filed back in March, or a judgment was actually issued in favor of that business group back in March. But within 2 weeks, it had already been appealed by the government. There's no information at this point as to when that appeal will be heard. Most likely, it would not be totally resolved before the end of this year. Some good news is in July, HR 9045 was introduced by Representative McCormick out of Georgia, and that was specifically to exempt associations, to specifically say homeowners associations who are subject to IRS Section 528, which gives us that ability to file special tax returns, would be exempt. But so far, it's not left committee. It's been filed. It's still in committee. And I would suggest with the other priorities of Congress between now and the end of the year, before December 31st, that it's probably unlikely that anything would pass the House, get the representatives in the Senate, get everyone behind it in order to pass. So despite all this pushback, the CAI lawsuit probably is not going to reach fruition through all the appeals by the end of the year. The federal lawsuit that was successful, the one that was successful, is on appeal, and it only applies to a very limited group of businesses. And then the House bill that was filed most likely is not going to go anywhere before December 31st. So let's talk about exemptions. There are actually 23 exemptions available under the law. A lot of them have to do with financial institutions and governmental entities and things like that. But there are two that really could apply to associations. The first one is exemption number 19 in the list is tax exempt entities. So if your association is a 501c4 tax exempt association, then it is exempt from this law, does not have to register under the law. We have a handful of our clients are tax exempt, and so they are exempt. Everyone else is not. And later on, if there are questions, first of all, you can type them into the chat box and I'll make sure I get all of those answered at the end. If you're not 501c4 tax exempt, you must file. The other exemption, which you might find curious, but it's large operating companies. So if you have an association with more than 20 full-time employees that are employees of the association, not the management company, not of contractors, but association employees, and you have gross receipts more than 5 million a year, you'd be exempt. However, there's very few associations anywhere that have more than 20 full-time employees. There are some really mega associations that are self-managed around the country. 20 is quite a bit of full-time employees. None of our clients have more than 20 full-time employees, so none of ours qualify for this exemption. Filing deadline is December 31st of this year. And one clarification I do want to make, sometimes there's confusion about nonprofit versus tax exempt. Nonprofit is a type of entity. When you register a corporation with the state, you register as a nonprofit entity or as a for-profit entity. All associations are registered as nonprofit. But tax exempt is a federal IRS designation and has nothing to do with whether or not you're designated as a nonprofit in the eyes of the state of Texas. Again, at the end, we can talk about how you could become tax exempt if there's a question on that. And there is already a question on that, and so I'll catch that at the end. Okay, so we recognize we need to file for every association except the few that are tax exempt by December 31st. And after that initial filing, if we made an initial filing today, then anytime there is a change in board members, because you had an election, you had a resignation, you had an appointment to a position, or if their personal information changes, a board member's home address, they've renewed their photo ID, it has a different number on it, then within 30 days of that change, an updated report must be filed with FinCEN. So those are the total requirements. Make your first full report by December 31st, and then have updated reports anytime within 30 days of any change. What does a report contain? Well, it contains information about the association's legal name, the location, the tax ID number, and a little bit more information about the association itself, plus information about every beneficial owner. Let's concentrate on the beneficial owners. We only need to provide 4 pieces of information: full legal name, home address, not business address, not P.O. Box, but your home address, birth date, and a current photo ID. That would be in Texas a driver's license. You can get a state ID if you're not, if you don't drive, or a passport. So it's got to be a photo ID. I mentioned earlier, if there are changes, well, what changes could there be? Full legal name? Well, if someone is married or divorced, officially changes their name in any way, that would be a name change. Home address, move from one home to another home. That's a change. Birth date, that's the one that's going to stay the same. Your driver's license. In Texas, when it's renewed, your driver's license number stays the same. So if you use that as your ID, you won't have to re-register once it changes. But on a passport, which has a longer duration on it, when it is renewed, you'll get a new passport number, and that would have to change. So those are the things that must be turned in. And what if we don't? Well, let's go back to right at the beginning. Why was this law passed? To deter and detect illicit activity, money laundering, foreign corruption, these really, really big things. And so associated with this law for not complying are really bad penalties. The civil penalty, any person who fails to register or provides false information or incomplete information, that individual is subject to fines of up to $500 per day that the violation continues. And there's even criminal penalties. There's two main things here. One is it's unlawful to do business without complying with the registration requirements. Keep in mind, this law is brand new. Few people have even registered now, let alone any enforcement, which is not going to occur until after December 31st. But it's saying you can't do business. So presumably that would mean an association would no longer be permitted to operate if in violation, if we did not register. What happens in January? A whole lot of folks are paying their assessments. Are we going to be in violation because we're doing business by accepting those payments and making payments to vendors and utilities? Again, it's all new, but the language of the law is kind of scary. And even further, if an association, corporation is found criminally liable, the penalty can be up to $10,000 and imprisonment of its senior leadership. Wow. These penalties sound great if we're fighting money laundering and everything else. If we're running an association and having national night out parties and planting flowers at the front, sounds a little harsh, but that's what the laws are. And because the penalties are so severe, there's no choice. Every association must comply by the end of the year. There are a few concerns that I want to go over, though, just to mention these. There may be some board members who don't want to give this information to the federal government. For whatever reason, they don't feel that that's something they want to do. And there may be some indication that if we give it to the government, then people will be able to do Freedom of Information Act request and get information about where I live and get a picture of my passport and all those things. And so there can be some very valid concerns. Today, the rules for assessing BOI data are very, very restricted, only to government agencies who have a need to know, and certain other very limited ways that you can get it. Once we submit your information, we can't even get a copy of what we submitted. I mean, that's how restricted it is today, but the rules haven't been finalized. And we can expect that they will open up and more entities may have the ability to access that data. So this isn't a crazy concern, but today, does the government know your name? Sure. Do they know your birth date? Yep. Social Security Commission knows that. They have a copy of your passport? Yep. Do they know where you live? Yep. You file tax returns. So I'm not sure that the government doesn't already have all the information they're asking for. They just don't have it in this particular form relative to your service on a board of directors. The most sensitive of anything that you need to supply is your photo ID. If someone hacked into the system somehow and had your name, birth date, address, and a photo ID, that stuff could be used by a bad actor to do all sorts of damage. And so by keeping the passport and photo ID out of the equation, maybe it allays some fears. So what the government has provided is an alternative to obtain what's referred to as a FinCEN identifier. If you work for the government already, or you're in military or any uh, military contractor that does government work, there's a good chance you already have a FinCEN identifier. But basically what a FinCEN identifier is, you personally go onto the FinCEN website and you provide your full name, your address, your birth date, photo ID. And I think there's a couple other pieces of information. It's been a while since I looked at the site. A couple other pieces of information, and they will give you back a FinCEN identifier. It's a number. So when we submit your information, we don't need your photo ID anymore. We can just put your FinCEN number. We'll still have to put your name, your address, and your birth date, but we're not capturing that photo ID, which again is one of the more sensitive things the government's requesting. The downside of this is that once you have a FinCEN identifier, you need to keep it current forever. You may get off the board next year, and if you move the next year out of the whole community, you move to another state, you must update FinCEN identifier, update that information. It goes on forever. Now, FinCEN does say that they're working on a way for individuals to deactivate the identifier. When that will occur, we don't know. And so until they come up with something, you must keep your data updated forever. The other downside of that that's not listed here is that once you take charge of your FinCEN identifier, the association is out of it. We're just using the number you give us. If you don't keep it current, there's a liability to the association because the association is relying on that and submitting unknowingly information that may not be updated. So there's some downsides of going the FinCEN identifier route, but it's certainly a way to go. So let's talk about how C.I.A. Services is handling this. Most management companies and attorneys are really reluctant to handle these filings. And the main reason is none of us want your photo ID and the other personal information on our systems. We don't want it passing through our systems. And heck, if we get hacked, we're putting your information at risk. We don't want that. Attorneys don't want that. And so in addition to just all the good housekeeping of safekeeping your information, FinCEN also imposes additional safeguarding requirements on anyone who files. So if we're touching your information, not only do we have all the normal safeguarding, but there's also additional FinCEN requirements and therefore FinCEN penalties on us if there was some sort of a breach or your information got out. That's why most don't want to handle it. So what have we done? Well, we've kind of split it up. We've partnered with a company called CTA Review to assist with the reporting. And CTA Review is a government reporting company. They've been working with the FHA, reporting to the government on condominiums for almost 15 years now, since 2010. They handle that confidential information. And the very last item on here, there's a bunch of technical stuff here, but basically, they're using an ISO standard. That's an international standard for safeguarding personal identifiable information and SOC 2 compliant and that's a AICPA standard for protecting personal identifiable information. It's on a cloud platform. They happen to use Google Cloud Platform. And in addition, if an association is no longer using CTA, so you're a C.I.A. services client, if you leave C.I.A. services, then all of your association data and your personal information as board members is physically deleted from their system. Or if you leave the board and you're still part of C.I.A. services, if you ask, we're happy to get them to remove your information, but leave the other information about the association out there. So that's CTA review. Back on how this all works, we provide the association data for the report. CTA review will personally contact each board member that we've provided to CTA review and provide a personal secure link where you can provide those 4 pieces of information: name, a home address, birth date, and either your FinCEN number or a copy of your driver's license, passport, or state ID. CTA will then submit the data to FinCEN and returns to us an acknowledgement that we've complied with, and this comes back from FinCEN, that we've complied with submitting the report. As I mentioned earlier, we can't even see the information we received because FinCEN doesn't echo that back. So that's our approach. There's a lot to this, and so there's a cost. First off, let me make clear, FinCEN does not charge for filings. I'm not positive whether or not they charge. I didn't create one, so I don't know if they charge for getting a FinCEN identifier. If they do, I would assume it's a relatively modest cost, but there's no charge for filing a CTA report. But for us to go through all of this to create the secure system that we've created, we are charging an initial fee of $500 for the first report. Whenever there's an update, that update process will be $250. And because we have so many annual meetings, 80% of our annual meetings approximately occur June through, or actually they're fall and spring. So about this time through April are the majority of our annual meetings. So there's probably going to be updates. So what we've said is for this period all the way through next June, we're not going to charge any update fees. If you have 1, 2, 5, 10 updates, we're not going to charge for those. And our fees over here include paying our partners. So this is the only cost. There's no tax on it. There's no other fee associated with this. This is the all-in fee for doing it. Let me mention, we've now covered everything having to do with the base CTA reporting. Let me get to the last thing that we're going to be recommending to all of our clients. And you'll hear this from your community managers in the months coming up before the end of the year. And that is bylaws amendments. We need to understand that CTA compliance today is mandatory. You don't have any choice. Just like you have to file tax returns, you don't have a choice. Just like we need to, with the state, file management certificates and other documents in the public records, we don't have a choice. And so in all those other cases, we're not relying on individual board members to cooperate. We file management certificates. It just happens because it needs to. We make sure that the tax returns are filed because they have to. But in the case of CTA, what if a particular board member says, you know, I just don't feel comfortable turning this information over to the government. I'm not going to do it. I'm not going to cooperate. Well, Yeah, there can be penalties on that board member, but most importantly, there are penalties on the association, severe ones. And so what attorneys have suggested to us and what we're recommending is that all of our clients adopt a bylaws amendment that allows for the automatic removal of any board member who does not comply with mandatory government reporting. This is the only situation today where there's mandatory reporting to the federal government. There's no mandatory reporting that a board member must do to the state government. And so today it's just this one, but we would make the bylaws amendment. We would recommend that it be generic for any mandatory reporting that a board member must do. And because we must, within 30 days of a new board member being elected, provide an updated report, we will attempt, if someone is brought onto the board, we will attempt to get the information. C.I.A. review will attempt to get the information from the new board member. If we're not able to obtain that within 30 days, the bylaws amendment would kick in, that position would become vacant, and the report would be submitted as an updated report without that name to remain in compliance. We don't want anyone to be surprised by this. So if someone's running for the board, we don't want them to get elected and then spring on them, hey, you need to report to the government, and they say no. So in our calls for nominations moving forward, we will begin communicating to any potential candidates for the board that this is a requirement, that if they are elected, they will need to submit these 4 pieces of information to FinCEN. And so, to summarize, filing a report with FinCEN is required, and the initial report is due by December 31st. Report updates must be filed within 30 days of any change in board members. And because of the concern about that personal identifiable information, that PII, we partnered with CTA Review to keep the information secure as we are keeping our clients in compliance. We're recommending this bylaws amendment. We'll be presenting that to each board in the next several months. So we're recommending that to avoid having the association at risk if a board member is uncomfortable or unwilling to provide their information. And then starting later this week, CTA Review, they wanted to wait until we had these seminars. They will start contacting board members with that secure link to provide the information. We won't get any of that information, but they'll keep us apprised as to which communities they've gathered all the information, and then they'll submit it and get the information back to us. And for any that haven't, they'll just let us know they have 2 out of 3 or 4 out of 5, and allow us to contact the board member who hasn't submitted the information to see if they have any concerns or if they have other questions that we can help with. We're starting early. If you want to call a couple months ahead of time early, so that we have everyone in compliance by December 31st. So that's what I wanted to go through. What I'd like to do now is open it up for questions. And we already have several on the chat, so let me go through those. If you have questions, go ahead and chat them, or you can actually unmute and ask the question if you're on a phone and you're actually not seeing things. So let me go ahead and go through the questions that have come up here. So the first question was, how do we get our HOA to become 501c4? I doubt we could get it registered in time, but curious. Well, 2 questions here. Could you do it in time? No. It does take several months to get it done, but let's talk about what 501c4 is. And 501c4 is 501c4 is a tax exemption under the IRS tax code. That's the section of the tax code. That section is all about charitable organizations. It says nothing at all about homeowners associations. And what it looks for is whether or not your corporation is doing good things for the public. So, for example, if you have street lights that you're paying for, that benefits the public. If you have, if the streets are public, people can drive through the streets in your community, whether or not you maintain them, people can come through your community, enjoy the beautiful homes. If you have a playground in the community that's not locked so that non-residents can't get in, but they can bring guests in and their friends and their families and have picnics there, you're doing good for the community. If you're mowing boulevards that are owned by the county or the city, you're doing good for everyone. And so those sort of things for the general public are what the IRS looks for to determine if you are benefiting more than just your own members, if you're benefiting the general public. If you're a gated community, really, really hard to get a federal tax exemption. And so let's do one more thing on the tax exemption, and that is, why would you want to do it? The cost of getting a federal tax exemption is going to run you $4,000 to $5,000. Just the application fee with the IRS is about $1,000, and you need a CPA who's familiar with getting these to have your best chance of being successful, and they're going to charge $3,000 to $4,000 for their effort. And if you get it, wonderful. You spent $4,000 to $5,000 and you have this exemption. You don't want to get this exemption just so you don't have to file a CTA report. Why would you want this exemption? The biggest reason for getting the exemption is if you get a federal tax exemption, the state of Texas will give you a sales tax exemption. That's where you save your money. You pay sales tax on grounds maintenance. You pay sales tax on your pool. You pay sales tax if you have security. You pay sales tax on your electricity bill. You pay sales tax on the copies we make. And so if you're a large enough association, you can make back the sales tax savings or the cost of getting the exemption, if you can get it, in a year or two just on the sales tax exemptions. So that's 501c4. Next question, is it possible to get a copy of this presentation emailed? Absolutely. And in fact, what we're going to do is tomorrow, we're going to contact all board members that we sent the invitation to, including those of you who are on this call, that will contain two things. It'll have a copy of this presentation. And secondly, for anyone who's interested, there'll be a link to this seminar. I'm recording it, so you'll be able to point your fellow board members to this if they would like to. Next question. You mentioned that updates need to be reported. That is only if updates occur. Yep, that's absolutely true. We have some boards who the members of the board haven't changed in 1, 2, 3, 5 years. And so if the board members don't change during election, or if there's no resignations and reappointments, we don't have to do an update. It's not an annual report that has to be done every year. But if you have a lot of activity, you have an election and someone then resigns and someone gets appointed, if those happen more than 30 days apart, that election, resignation, and appointment would mean 3 updates need to be filed. So that's important. And in terms of if a board member moves but is still on the board, that could then be a 4th update. So there's a lot of updating required. The next question is, after the initial filing by the end of this year, is it an annual requirement to file the report? or when there is a board member change? Great question that I just answered, I hope. And finally, for the fees, is that coming from the subdivision funds? Yes, the fee that will be charged by C.I.A. services will come from the association. And one of the things, once it became clear that this law wasn't going to be exempting the associations anytime soon, we've asked all of our managers to put into the budget $500 outlook under corporate legal fees for 2024. And then we've asked them to put in $500 per year going forward, assuming that we'll have an annual meeting change. That's one. And that we might then have a resignation and reappointment, two. So on average, we might have two updates per year. One thing to keep in mind, a couple things to keep in mind in terms of cost. If we end up having a resignation, it would be helpful from a financial standpoint if the board made the appointment within 30 days of the resignation, because then we can do one report that reflects both of those changes. And if you want to appoint someone to the board because you maybe have an opening right now, do it by May 31st of next year, because all those updates to May 31st, we're not charging for those. So you could save money by cleaning up any vacancies by May 31st. Are there any other questions? Those are the only ones that are in the chat. Well, in that case, I really would like to thank all of you for taking the time to come to this. Please spread the word with your fellow board members. As I indicated, tomorrow we will email a copy of this to everyone, the presentation itself, as well as a link to tonight's presentation so that you can share it with others. You can review it if you've missed something or wanted to follow up on a point that I made. So guys, thanks so much. Have a great rest of the evening.